All right, time to take a look at not only the gold market but also the stock market. They have been correlated inversely lately. I think we're in a very erratic market that's going to uh, whipsaw a lot of traders. All right, um, when we got this decline here, we were starting a left translated daily cycle, but I said at the time when we got this big move up here that the government had intervened. The Fed was going to try and push the market up in time for that FOMC meeting uh, so that they could justify just a single 25 basis point cut. Um, I said at the time that this was an artificial move simply for that reason, and that it would fade away once the FOMC meeting had passed, and of course that's what's happened. This is pretty much standard operating policy for the Fed before every um, Federal Reserve event. They always pump the market up ahead of these events. It just makes their job easier. But then the market tends to go back to doing what it was doing after the interventions. So, this is the reason why I didn't get bullish on this breakout like a lot of people did. I knew this was an artificial move, and that it probably had little chance of sustaining an upward trajectory after the FOMC meeting. And then we saw multiple efforts to try and prevent the market from dropping below the 50-day moving average. Again, all they managed to do is just exacerbate the move down. But we're getting very late in this daily cycle. We're at 41 days here. So, we're going to see a lot of people get really bearish, start looking for a crash, but it's probably too late. At 40 days and the McClellan oscillator is already oversold, we're going to find a bottom here pretty soon. I doubt that we go below the August 6th low here. My guess is that we're going to come down. Maybe we can just come down and test 2,900, maybe a little below it. But then I think we got another bounce, and I think it's going to take another complete daily cycle before we can finish off this intermediate cycle decline, which began here. And if the market had been allowed to just progress naturally, we would probably be done with this by now. We probably would have got our bottom sometime in uh, mid to late September, and we would be back on our way up. But they've stretched this out, and they're going to make this very erratic. It's going to be hard to trade. There's going to be a lot of whipsawing, and we're probably setting up for a whipsaw here pretty quickly. My guess would be before the end of the week. If not, then the first day or two of next week, we're going to get our bottom, and it's going to catch a lot of people short, and then we're going to have another strong bounce. They'll probably want to, again, prop this up into the FOMC meeting on October 30th, and then after that, then I think we have the opportunity to finish this intermediate decline, and as long as we don't go above this peak, then this whole intermediate cycle will remain left translated, which means that we should break below this May intermediate cycle low right here at some point later in the year, maybe again in early December like we did last year. All right, and I think the metals market is also setting people up for a whipsaw. I warned people that this bounce would probably, was going to be a fake out move. It would not make a higher high. Caught a lot of people getting long too early. I think the same thing's happening here once the stock market bottoms and then starts to move back up towards those all-time highs. I think gold, I think this bounce will just prove to be, another counter trend rally in the declining phase of an intermediate cycle. It's still very early in this daily cycle. Don't know that I've ever seen a daily cycle bottom this quickly. Here was our daily cycle low. So my guess is the most likely spot for this to bottom is going to be the end of the month around that FOMC meeting, or maybe the first week of November. But again, I think this is going to be a very difficult move down. There's going to be lots of these counter trend moves. that pull people back in too quickly, and then they roll over and make a lower low before before they can change this pattern of lower lows and lower highs. So I would caution people here. I don't think this is the start of the next intermediate rally. I think this is another fake out move, and we still have further to go before gold completes its final intermediate cycle low. I still think we got to come down and test this congestion zone right in here, minimum, before this is over. So um, I would caution people about trying to buy these convincing rallies. This is the second one already. We had the bounce out of the daily cycle low. Now we got this one. There will be more, but I think you should just be patient, understand what's happening. These are counter trend moves and an ongoing intermediate decline, and it's probably not going to be over until the end of the month or beginning of November.